Wait, before you scroll past this video, I need to tell you something that your bank hopes you never figure out. Something worth tens of thousands of dollars to you personally. Your credit score is not a measure of how responsible you are. It is a profit tool, carefully designed by banks and financial institutions to separate people into categories based on how much they can charge you. But here's the good news. Today, right now, in this video, I'm going to show you exactly how this scoring system really works behind the scenes, and more importantly, the completely legal strategies to hack it in your favor and save yourself thousands of dollars. Welcome back to the channel, where we break down complex financial systems into simple, actionable strategies that actually work in the real world. If you are new here, hit that subscribe button right now, because what I am about to share with you today could literally change your financial life. Stay with me until the end, because the last tip alone is worth thousands of dollars. Let me start with a number that is going to shock most of you. A difference of just 50 points on your credit score, just 50 points, can cost you $80,000 more over the life of a standard 30-year mortgage. Let that sink in. $80,000. Think about what $80,000 means to your life. That is a college education. That is years of retirement savings. That is the emergency fund that keeps you from going into debt when life throws you a curveball. And the terrifying part, most people are paying this extra cost right now without even knowing it. Now, here's the part the financial industry absolutely does not want you to realize. The difference between a 640 score and a 720 score is not about being more responsible with money. It is about knowing the specific rules of the credit scoring game. And today, I am teaching you those rules. And here's the most powerful thing. I want you to walk away knowing today your credit score can be improved significantly. We are talking 40, 60, even 100 points in as little as 90 days. 90 days, not years, not decades. 90 days when you apply the right strategies in the right order. But before I give you the 4 specific hacks, and I promise they are genuinely powerful, you need to understand how the credit scoring system is actually built. Because once you understand the architecture of the system, everything else makes perfect sense. Think of it like understanding the rules of chess before you try to win the game. So let us break down the FICO score, the score that determines your entire financial life right now. All right, here is exactly how your FICO credit score is calculated. Most people have no idea this breakdown even exists, and that is exactly why most people are losing thousands of dollars unnecessarily. Your score is made up of 5 specific components, each with a different weight. Let me walk you through every single one. Number 1, and this is the biggest factor, is your payment history. This makes up 35% of your entire score. 35%? This is simply your track record of paying bills on time. Every on-time payment builds your score. Every missed payment damages it, sometimes severely. This single factor alone can make or break your financial future. Number 2, making up 30% of your score, is your credit utilization ratio. This is the percentage of your available credit that you are currently using. And this is the factor that most people accidentally destroy without realizing it. We are going to spend serious time on this one because it is your fastest lever to pull for rapid score improvement. Number 3, 15% of your score, is the length of your credit history. This is simply how long you have had credit accounts open. The older your account, the better your score. This is why closing old credit cards, even ones you do not use, is one of the biggest mistakes people make. You are literally deleting years of positive credit history. Number 4, 10%, is your credit mix. This refers to having different types of credit accounts: credit cards, auto loans, student loans, mortgages. Lenders like to see that you can responsibly manage different types of debt. You do not need all of these, but having a variety helps your score over time. And number 5, also 10%, is new credit. Every time you apply for a new credit card or loan, a hard inquiry is recorded and your score temporarily dips. Now, here is the insight that changes everything. Look at those 5 factors again. 2 of them, payment history at 35% and credit utilization at 30%, together control 65%. of your entire credit score, 65%. And both of these factors can be actively improved in a very short period of time. This is why the strategies I'm about to share with you are so powerful. They target the factors that matter most. Okay, here we go. Hack number one, and this is the one that produces the fastest results I have ever seen, is what I call the utilization timing trick. And once you understand this, you will genuinely be amazed that banks never bother to explain it to their customers. Because if they did, they would lose billions in interest income. Here is the key thing you must understand. Your credit utilization is calculated based on the balance that gets reported to the credit bureaus, and that balance is not reported in real time every day. Your card issuer reports your balance on one specific date each month, and that date is almost always your statement closing date. So here's exactly what you do. Find out the statement closing date on each of your credit cards. It is listed in your online account or monthly statement. Then, a few days before that date, pay your balance down to below 10% of your credit limit. After the statement closes and the balance is reported, you can use your card normally for the rest of the month. The bureaus will see a low balance, and your score reflects that low balance. Let me make this completely real for you with an actual example. Meet Marcus. Marcus had a credit score of 640 points. He had $8,000 in credit card balances spread across cards with a total limit of $10,000. That is an 80% utilization rate, which is absolutely destroying his score. Most lenders see 80% utilization and immediately consider you a high-risk borrower. Here's what Marcus did. He scraped together enough money to pay his credit card balances down to $900, just $900 out of $10,000 before his statement closing date. That brought his utilization from 80% all the way down to just 9%. 9%. He did not change anything else. He did not open new accounts. He did not dispute anything, just one payment before the right date. The result? Marcus's credit score jumped 67 points in a single billing cycle. In about 30 days, 1 month, his score went from 640 to 707. He went from being rejected for a car loan to qualifying for a prime interest rate. That single strategic payment saved him thousands of dollars in future interest. This is not theory. This is exactly how the system works. Your action step for hack 1. Log into every credit card account you have right now and find your statement closing date. Write it down. Set a phone reminder 5 days before that date every single month. And make sure your balance is below 10% of your limit before that date. Below 10%, not below 30%. Banks will tell you 30% is fine, but the real sweet spot for maximum score impact is below 10. Hack number 2 is one that most financial advisors overlook, and it can add a decade or more of positive credit history to your report, literally overnight. This is called the authorized user method, and if you have a family member or a trusted friend with excellent credit, this strategy can transform your credit profile faster than almost anything else. Here's exactly how this works. When someone adds you as an authorized user on their credit card account, that account, including its full history, gets added to your credit report. We are talking about the account age, the payment history, the credit limit, all of it appears on your report. You do not even need to receive the physical card. You do not need to use it even once. Think about what this means in practice. If your parent or sibling has a credit card they opened 15 years ago with a perfect payment history, and they add you as an authorized user today, tomorrow morning when the bureaus update, your credit report suddenly shows 15 years of perfect payment history. Your credit age jumps. Your score jumps. One conversation, one phone call, potentially 100 points added to your score. Now, there are some important things to know before you use this strategy. First, you want to be added to the oldest card they have with the best payment history. Second, make sure the card has a low utilization rate itself, ideally under 30%. A maxed out card will actually hurt you even as an authorized user. Third, only do this with someone you completely trust, someone who will continue making on-time payments. I know some of you are thinking, what if I do not have a family member with great credit? Or what if the relationship is complicated? That is a fair concern. There are legitimate credit building services that offer authorized user trade line rentals, where you pay to be added to a stranger's established account. This is legal, but I would encourage you to research carefully and use reputable services only. The free version, using family, is always the better first option. Hack number 3, and this one makes my blood boil a little, honestly. The Consumer Financial Protection Bureau, the official US government financial watchdog, conducted a major study and found that 1 in 5 Americans has a significant error on their credit report. 1 in 5. That is 20% of the population potentially paying higher interest rates for mistakes they did not even make. Here's what you need to do right now. Go to annualcreditreport.com if you are in the United States. If you are in the UK or Australia, go to ClearScore. It is free. Pull your full credit report from all 3 major bureaus, Equifax, Experian, and TransUnion. Then go through every single line item and look for these specific types of errors that I am about to give you. Here are the 4 most common and damaging credit report errors to look for. Number 1, accounts you do not recognize. This could be identity theft or simple data mix-ups. Number 2, incorrect late payment. You paid on time, but the bureau shows it as late. Number 3, balances that do not match your actual statements. And number 4, accounts listed as open that you have already closed, or vice versa. Once you find an error, and statistically there is a 1 in 5 chance you will, here is exactly what to do. Write a formal dispute letter to the credit bureau, in writing, not just online. Include copies of any supporting documents, bank statements, receipts, anything that proves the error. Send it certified mail so you have proof of delivery. Under the Fair Credit Reporting Act, bureaus are legally required to investigate and respond within 30 days. I want you to understand what successfully disputing even one error can do for your score. If an incorrect late payment is removed from your report, your score can jump 20 to 50 points immediately. Because remember, payment history is 35% of your score. One error removed could mean a lower mortgage rate, a better car loan, even qualifying for rewards, credit cards you currently cannot access. This is completely free and completely your legal right. Hack number 4 is one of the simplest phone calls you will ever make, and it could improve your credit score without you spending a single extra dollar. This is called the credit limit increase request, and most people do not do this because they simply do not know it is an option. But it is, and credit card companies almost never advertise it proactively. Let me show you the math, because this is genuinely brilliant in its simplicity. Say you have a $3,000 balance on a card with a $5,000 limit. That is 60% utilization, damaging your score every single month. Now, without paying off a single dollar, you call your card company and they increase your limit to $10,000. Suddenly, that same $3,000 balance is only 30% utilization. Cut in half. Instantly. Now here's the critical detail that most people miss, and getting this wrong can backfire. When you call to request a limit increase, you must specifically ask, will this request require hard credit inquiry? And if they say yes, you say, then I would prefer to request a soft pull only. Most major card issuers, including Chase, American Express, and Discover, offer soft pull limit increases, especially for existing customers with good payment history. And here's a pro tip that multiplies the effect. Combine Hack 1 and Hack 4 together. Request a credit limit increase first to raise your available credit. Then pay your balance down below 10% before your statement closing date. You are now hitting your credit score improvement from 2 directions simultaneously, lowering your utilization percentage from both sides of the equation at the same time. When is the best time to request a credit limit increase? Timing matters. Wait until you have made at least 6 consecutive on-time payments on that card. Request the increase when you have recently received a salary increase. Mention it to the representative. And do not request increases on multiple cards in the same month. Space them out by at least 3 months each to minimize any potential impact. Now, we have talked about what builds your score, but I would be doing you a disservice if I did not also walk you through the things that will destroy your score faster than almost anything else. because protecting your score from damage is just as important as building it up. Avoid these 4 mistakes, and you will never find yourself starting from scratch. Score destroyer number 1, missing a payment by just 30 days. I want you to hear this clearly. A single missed payment that is 30 or more days late can drop your credit score between 60 and 110 points in 1 month from one missed payment. This is the nuclear bomb of credit damage. Set up autopay for at least a minimum payment on every card you own. Today, not tomorrow. Score destroyer number 2, closing your old credit cards. I hear this all the time. I paid off my old credit card, so I closed it. That feels responsible, but here is what you are actually doing. You're reducing your total available credit, which increases your utilization ratio, and you are shortening your average credit history age. Both factors hurt your score simultaneously. Keep old cards open, even if you use them once a year for a small purchase. Score destroyer number 3, applying for multiple credit cards or loans in a short period of time. Each time a lender pulls your credit with a hard inquiry, your score drops between 5 and 10 points. Apply for 4 new cards in 2 months and you have just voluntarily given away 20 to 40 points for no good reason. Space out any new credit applications by at least 6 months. And never apply for new credit in the 6 months before a major loan application like a mortgage. Score destroyer number 4, co-signing a loan for someone who does not have responsible financial habits. When you co-sign, that loan appears on your credit report. If they miss a payment, you take the credit damage. If they default, your score potentially crashes by 100 points or more. Only co-sign for people with proven, reliable financial behavior. Your credit score is your financial reputation. Guard it like it is worth $80,000. Because it literally is. Before I send you into your week, I want to leave you with a concrete 90-day action plan, because information without action is just entertainment. And I do not make these videos for entertainment. I make them for transformation. So here is exactly what to do in the next 90 days to maximize your credit score improvement as quickly as possible. Days 1 through 30, your foundation month. Day 1. Pull your free credit report from all 3 bureaus. Scan for every error. Begin your dispute letters for anything incorrect. Day 7. Find the statement closing date on every credit card. Set recurring phone reminders. Day 14. Call your card issuers and request soft pull credit limit increases. Day 30. Pay all balances down to below 10% before your first statement closing date. Days 31 through 60, your momentum month. Continue paying every single bill on time. No exceptions. Set up autopay for every credit card minimum payment immediately if you have not already. Check if your dispute letters have received responses from the bureaus. Follow up if needed. Ask a trusted family member about becoming an authorized user on their oldest account. Begin tracking your score weekly using your free bank monitoring tool. Days 61 through 90, your results month. By now, your disputes should have been resolved and any errors removed. Your authorized user account should be showing on your report. Your utilization is consistently below 10% each month. Now pull your credit score again and compare it to day 1. If you have followed this plan with consistency, you should see a very significant improvement, potentially 40 to 100 points or more. All right, here is your first action step, and it literally takes 60 seconds. Open your banking app, your credit card app, or go to Credit Karma right now, or after this video, and check your current credit score. Most major banks now offer this completely free inside their app. Capital One, Chase, Discover, Wells Fargo, they all have free credit monitoring built in. Check it. Know your number. Then, pick just one of the 4 hacks from this video that you can implement this week. Not all 4 at once, just one. Maybe it is checking for errors on your credit report. Maybe it is finding your statement closing date and scheduling a payment. Maybe it is making that phone call to request a higher credit limit. One action this week. Consistency beats perfection every single time. Now I want to hear from you, and this is important for your accountability. Drop your current credit score in the comment section below. It does not matter if it is 450 or 800. There is absolutely zero judgment in this community, just numbers and progress. If you are willing to be accountable to your own improvement, drop your score below right now. And let us celebrate progress together. And if this video gave you genuinely useful information, if you learned at least one thing today that you are going to act on, please give it a thumbs up. It takes literally 2 seconds and it helps this channel reach more people who need this exact information right now. And share it with someone you care about who you think might benefit from knowing these strategies. You could be the person who saves them $80,000. I want to close with this truth because I think it is the most important thing you will hear today. A better credit score is not just a number. It is a better life. It affects the interest rate on your mortgage, potentially saving you $80,000. It affects your car loan rate. It affects whether your rental application gets approved. It can even affect job applications in certain industries. Your credit score is your financial reputation, and you now have the tools to build it strategically. Subscribe to this channel right now, because next week we are covering another important topic. Hit subscribe and the notification bell so you do not miss it. Remember, the banks understand exactly how the system works. Now, so do you. The only question left is what you're going to do with that knowledge. Take action. Start today, because your future financial self, the version of you living in the house you want, driving the car you want, free from the financial stress you're carrying right now. That version of you is counting on you to start today. I will see you next week.